Good morning, everyone. Thank you for being here for this three-part webinar series titled Amplify Your Business with DPA and Engagement Tools. If this is the first time you're joining us, this is a three-part series, which means if you missed part one, you will find it on our YouTube channel for GSFA. In addition, there is another part coming up next Tuesday that we hope you will register for. These webinars build on each other. So everything we were discussing on Tuesday, we're just going to build on that and give you more DPA and engagement tools. With that, I will go ahead and get started. We are going to share the slide presentation with all of you afterward. You'll get a copy of it. And we also will be recording this session and have it up on the YouTube channel shortly. After the after the webinar is over, a survey will pop up on your window. We're really hoping that you will give us a little feedback on the webinar, your thoughts, what was helpful. It does help us as we try to enhance these trainings for our lenders and real estate agents. I'd also like to extend a special thank you to our technical host today, Dan Nguyen. He'll be supporting us behind the scenes throughout the entire webinar series. Dan's going to be managing most of the technical aspects of the Zoom platform and making sure that everything is running smoothly and that we can stay focused on the content. So if you run into any issues or you have any questions during the session, feel free to drop them in the chat window. Dan's got us covered. My name is Carolyn Sunseri, and I'm the Marketing Director with Golden State Finance Authority as your host today. Now with me is also our co-host, Angel Romero from Down Payment Resource, and I'm very pleased to welcome Angel to today's webinar. She has over 20 years of experience in the mortgage industry. She's a seasoned communicator and strategic partner. She's been working on building relationships and helping organizations to work with borrowers in underserved markets for her entire career. She started before joining DPR, she worked at Cherry Creek Mortgage, where she used DPR's directory for down payment assistance programs to connect borrowers with vital support. And that expertise there at Cherry Creek Mortgage set her aside as one of their top DPA agents. We're thrilled to have her here today. She's going to be bringing a lot of her thoughts and strategies and experiences to this discussion. So welcome, Angel.
Good to be here. Thank you, Carolyn.
Now, before we get started, I want to quickly recap what session one was about, because as I mentioned, these webinars are actually building on each other. So we talked about down payment assistance and how it is the solution to the #1 barrier that borrowers have expressed, not having cash resources for down payment and closing costs. However, there's a hidden barrier that's sometimes even more important. DPA programs exist, but that hidden barrier is around a lack of knowledge. That's a lack of knowledge on behalf of real estate agents, sometimes loan officers, and especially potential home buyers who may be disqualifying themselves from the programs through myths and misconceptions. And real estate agents and lenders may be steering clear of DPA when they are under these myths that it's hard to work with or that it doesn't. We also talked about the importance of trust and reputation in why people choose their lenders, why they choose their real estate agents. And that at the end of the day, studies are showing us that once a borrower works with a lender and gets an offer, they don't go rate shop like people think. They are very loyal to that agent or to that lender because of things like trust, reputation, and that relationship that's being built. And so that's what we're really doing with this webinar series today, is digging deeper into the relationships between lenders and real estate agents, trying to give you more tips and tools to strengthen that aspect of your business. This is part 2, where we say we are getting into action. We're taking the information and getting into action. And we're going to start that by talking about the actual DPA programs from Golden State Finance Authority. Again, on your screen is the QR code for next Tuesday, which is part 3. We hope you'll join us for that, where we get into digital marketing and how to expand your online presence. Angel, would you like to share what we're hoping are going to be the key takeaways for our audience today?
Absolutely, Carolyn. The key takeaways today are going to be understand GSFA's DPA structure, what the qualifications are and what the buyer benefits are. Megan's going to have a wealth of information for you. We're going to hear from Chris and hear real life success stories. And we're going to give you tips and tricks on how to strengthen agent lender connections, which is so valuable, and tips and tactics to build trust and improve communication and drive referrals. That's where your business is going to grow and expand.
And as we mentioned, these are going to build on each other. So when we get to the end of this, we're going to be leaving you with things to go out and utilize in your business. And then next Tuesday, we're going to be adding even more tips and strategies to expand your business. So with that, I'd like to introduce our primary speaker for the first half of the webinar, which is Megan Harris, who also works for Golden State Finance Authority. Megan is a seasoned mortgage professional as well. She's got a diverse background in both residential and commercial lending. She's worked for over 20 years in the industry. She is the program administrator in our housing department at Golden State Finance Authority. She facilitates lender training, realtor training, homebuyer workshops, information sessions to assist our primary mission, which is to support affordable housing in California by providing access to down payment assistance. So with that, Megan, I'd like to introduce or welcome you to today's training and let you dive into the GSFA programs themselves.
Thank you, Carolyn, and welcome everyone. Again, I'm Megan Harris, Program Administrator here at GSFA, and I'm excited to be here with you all today to introduce GSFA programs to you and show you how they can be solutions to expanding your buyers' opportunities for homeownership. All right, get the slide show going. Okay. So one of the unique things about GSFA is that we're a housing finance agency, and our primary mission is to expand affordable homeownership options in California. And we do that by enhancing ordinary mortgage loans with down payment assistance programs. So our model is to take a first mortgage and to attach down payment and closing cost assistance help with that as a package. And one of the other aspects of our programs is that we set the interest rates for the first mortgage loans, as well as the other options that come along with the program. So not only is your client getting the benefit of down payment assistance, right, they're also getting the benefit of a low to moderate interest rate on their first mortgage loan. And this is an excellent tool for you to use. We provide these program options to lenders who are our primary customers. We also work with real estate agents. You can then take these programs and provide them to your clients so that they have more options when it comes to purchasing a home. So far, we've helped over 86,300 home buyers with over $673 million in assistance. So I'd say it's working so far. And part of what's working so well for GSFA here is the fact that our programs are flexible, right? Affordability is central to all the work that we're doing here, but flexibility is important too, because we also understand that it doesn't really matter how affordable something is if it's not flexible enough for people to actually benefit from it. So flexibility is going to stand out from the gate, and it's going to help you as a lender or an agent close more deals. So to start, as I mentioned, we set the interest rates for the mortgage loans under the program, and each interest rate has its own level of down payment assistance that it comes with. So as a provider, you would not only choose the interest rate based on how much assistance your client needs, but you would also choose it based on the interest rate they can afford. And again, our interest rates are typically at or below market, so that's not hard to do. Our max down payment assistance goes up to 5.5% of the total first mortgage loan amount. And unlike a lot of other programs out there, we don't tell you how to divide it up, right? It's not that you have to use 3% for this and 2% for that. You can divide up the assistance in any way that makes the most sense for your client's transaction, whether it's for down payment, closing costs, or even paying down a portion of the first mortgage loan. Any combination of ordinary and customary closing expenses can be covered using the assistance from our program. Now, if your client has their own funds, or maybe they're getting a gift from an eligible source, they're welcome to combine those funds with the assistance to enhance their leverage in the transaction even further. We also have an extra $5,000 closing cost gift that's available to buyers purchasing an eligible census tracts. And that's exclusive to our GSFA Platinum program, which we'll get into a little bit more detail later. And then we also have a variety of financing options and property types that can be leveraged through the program as well. So again, flexibility, right? It's the name of our game here in addition to affordability, and it continues because we understand that providing this flexibility not only helps our buyers, right, but it helps you as our business partners, our lenders, our real estate agents expand your buyer tool. So continuing with that theme, there is no first-time homebuyer requirement for your client to use our program. I know when people think about DPA, they automatically go to first-time homebuyer, right? And that's true for a lot of programs out there, but it doesn't apply to GSFA. Even if your client has owned a home in the past, maybe they own property now, or they have rental property, or they're in a primary residence and they're looking to change primary residences, they can still use our program. Credit scores are also reasonable, as low as 620, so it doesn't have to be perfect credit. And debt to income ratios can go as high as the AUS, the automated underwriting system, will approve. As I mentioned, a variety of property types are eligible under our programs as well. As long as they're owner occupied, it can be a 1 to 4 unit, a condo, townhome, PUD, or even a manufactured home. And we also have refinance transactions available through our programs in addition to purchase transactions. And again, this is available throughout the entire state of California without any geographical restriction. So one of my favorite features of the program is the fact that it doesn't add any time. I know when it comes to down payment assistance, that's a chief concern for a lot of the lenders and realtors out there. They want to know, is this going to slow down my deal? And the answer is no. We provide an online reservation system that gives total autonomy to the lender who is making the reservation and closing or choosing the interest rate from our rate sheet, right? So they go into the reservation system, they choose the rate, they choose the down payment assistance, and then it's business as usual from there. They're closing the loan on their own timeline. Each interest rate has a 60-day lock period, and that's the time frame that the lender has to get the loan sold to the servicer. And we provide autofilled documents for the documents that we supply, so there's not a lot of extra leg work and time added there. Basically, the entire loan fulfillment process is delegated to the lender. There's no extra reviews. There's no clearing to close. We're not underwriting anything whatsoever. So there's no additional reviews, no escrow delays. We also have a support team. Our client relations is available Monday through Friday, 8 a.m. to 5 p.m. Pacific time to support you in your questions or concerns on the program. I also want to encourage you to leverage our website. Our website is a wealth of resources. There's lots of information there. You're going to have our lender participation guides in particular, which are going to give you guidelines and process information that'll be critical to understanding as you're moving through your transaction. But basically, this is a streamlined process. It's just going to make things better for you and your clients. So speaking about, what's better, right? Having more money at the closing table. I think a lot of folks, there's a certain amount of anxiety when it comes to purchasing a home, right? And so the less stress we can help our clients manage, the better. And so with that, I wanted to show an example of the difference the assistance can make. And this example is going to use an $835,000 purchase price with an FHA loan. And with FHA, it's typical to have a minimum down payment of 3.5%. And so in this case, that works out to $29,251. The loan to value is then 96.5%. And then we add the upfront MIP to that, and we have a total loan amount of $820,000 and change. Okay. Now, if your client were to get 5% in assistance from our program, they're going to get 5% of their total first mortgage loan amount in assistance, right? Not their purchase price. But as we can see, that works out to over $41,000, which we can see is more than enough to cover their entire down payment, right? And leaves them almost $12,000 left to handle closing costs. And again, this is just an example of the difference the assistance can make. It's not a directive. You can divide the assistance up in any way you'd like. Just keep in mind, you cannot use the assistance to pay for repairs to the property or paying off debts to qualify. But pretty much everything else that's ordinary and customary is fair game. So with that being said, we live in California, right? And there's a complex medley of issues that keep people from being in a position from buying a home, right? Economic factors, credit, you name it, right? Housing inventory, et cetera, et cetera. That being said, the number one reason why the majority of people don't own a home right now in California is because they don't have enough money for that upfront investment, right? The down payment, the closing costs. Because the reality is the vast majority of Californians who are renting are paying mortgage-sized rent. So it's not the ability to afford a mortgage that's the issue, right? It's the upfront investment that holds people back. So if you have a client that's in that scenario and they want to hold off, right? They not quite comfortable with moving forward. They want to see what happens with the economy first. They want to see what kind of executive orders are coming down from administration, right? This is what you want to communicate. First of all, we want to keep that mentality of marry the house, date the rate, right? Because we all know that the economy can shift on a dime. So using the earlier example we had of the $835,000 purchase price, let's say your client, they want to take their time. They want to see what's going on. They're going to save up their own money and get to that down payment on their own. To do that, they're going to save $500 a month, which is going to take them over 4 years or 58 months to do. Okay. Now, had they leveraged our program 4 years earlier, right, in that same period, that property could have accumulated over $184,000 in equity, right? And that's what we call an opportunity cost. And these are the kinds of pros, cons, and scenarios we want to communicate to our clients when they're on the fence or hemming and hawing about when to pull the trigger. We've all seen what can happen in the span of 4 years, right? Look at 2020 to 2024. Okay, so just case in point there, and it's a good opportunity to help highlight those opportunities for your clients. So I want to talk a little bit about our general guidelines for the program. The program has interest rates that are all 30 years fixed, okay, on the first mortgage loans. And the first mortgage loan types are FHA, VA, and USDA. We also offer HUD 184 loans, which are available to federally recognized tribal members. All of the government loans are available for purchase transactions only. For conventional loans, we have purchase or refinance options available, and that's going to be through Freddie Mac HFA Advantage, which is under the Home Possible suite of products. The max loan limit for the program is $806,500, and as you can see, we can go above that amount per the example we had a couple slides ago if it's by the amount of the upfront MIP or VA funding fee on those respective loan types. And even though we do have a max loan limit, we don't have a max purchase price. So as long as your buyer can make up the difference between what the assistance and the first loan amount won't cover, they can go as high as they'd like on the purchase price. And then we come to income limits, which is a popular question we get on our programs. What are the income limits? Well, first and foremost, they're based on credit qualifying income, the first mortgage loan type, and then the county where the property is located. Now, one of the other benefits of our program is the flexibility on the income limits. We don't have income limits on government loans, so that's number one. If you are using a USDA loan, you're going to follow USDA's income limits because they have their own criteria there. But if it's an FHA or VA loan, there will be no income limit. Now, our conventional loans do have income limits, but they're actually very reasonable. And we have some examples here of what those look like on this slide. Contra Costa 284,760, Sacramento 205,20. And so you kind of get a sense of how generous and flexible those income limits are. This information is published on our website, gsfahome.org. I encourage you to poke around there and kind of get a feel for what things look like on your own. So getting into specifics, our GSFA Platinum program, this is our flagship program. It's been around the longest. It happens to be the most popular program we have available. And this is where the minimum credit score will be 640. If it's a manufactured home, 660 will be the minimum credit score. And then the max debt to income ratio is going to be 45% on manufactured homes, 50% if the credit score is 680 or higher on government loans. And then if you have a conventional loan that's 1 to 2 units, 50% is going to be the max DTI, even with the 640 credit score. The max assistance available under Platinum is 5.5%. Again, that's based on the total first mortgage loan amount. And then there's also that $5,000 additional closing cost available with this program that's available for folks purchasing in targeted area census tracts. So Platinum is special. It's unique because it has 3 different options, and that's one of the things that drives its popularity. First and foremost, the standard product is available to any eligible borrower in California who meets the minimum requirements. That's where the assistance is provided up to 5% maximum as a second mortgage to the borrower. And that second mortgage has a 15-year fully amortizing term. The interest rate on that mortgage is going to be the same as the first mortgage. Then we have Platinum Select, where it starts getting more specific. This is available to folks who have certain occupations, who work in certain industries, such as healthcare, first responder, education, law enforcement, etc. And we have a detailed list of what those occupations are on our website. And these folks have access to every single loan type that we offer under the program. Of course, they would need to be eligible for it, but they have their pick of the litter here. Now, let's say your client is not in one of these occupations, right? But they are going to use an FHA energy efficient mortgage or a USDA loan, then they too can access Platinum Select. And Platinum Select doesn't provide the entire assistance as an amortizing second like standard. Instead, of that 5% assistance, 3.5% of it will be an amortizing second mortgage if it's a government loan, or 3% if it's conventional. Again, the interest rate is the same as the first mortgage. And then on top of that, there's a gift from the program of up to 2%. And so this is where more benefit is added to and value is added to the program and your client's transaction as a result. And I want to emphasize that your client doesn't have to be a teacher or a police officer to use this program. They could be a custodian that works for the school or a cafeteria worker at the hospital and still use Platinum Select because the business they work for, the industry they're in, provides the services that are outlined in this program. And then finally, we have Assist to Own. Assist to Own is available to GSFA member county employees. And so there's 40 member counties in total. If your client works for one of those 40 counties, not just in the county, but for the county, then they can be eligible for Assist to Own. And Assist to Own is where the max assistance goes up to 5.5%. And none of the assistance is provided as an amortizing second. Instead, 3.5% on government or 3% on conventional will be provided to the borrower as a 30-year silent second mortgage. So there's no interest, no monthly payment. It's simply going to be due and payable whenever they sell or refi. There's no equity share, none of that. Okay. And then in addition to that silent second, they're going to get a gift of up to 2% from the program. And then we have Golden Opportunities. And I like Golden Opportunities. It is our newest DPA program. That's the only reason why it's less popular than Platinum. She's still picking up steam. But Golden Opportunities has a minimum credit score of 620 on FHA, VA, and conventional loans, and then 640 for USDA. And the max DTI on this program is based on AUS approval. So this is probably by far our most flexible option when it comes to qualifying your client if you have somebody with a more challenging profile that still needs assistance and an affordable interest rate. There's no manual underwriting on the Golden Opportunities loan unless you're using VA or USDA, and then you'll follow those overlays. But the max assistance available on Golden Opportunities is up to 5%. And of that 5%, 3.5% will be a second mortgage if it's government, or 3% will be a second mortgage if it is conventional. And that's going to be a 15-year amortizing second, so there will be that small but affordable monthly payment. In addition to the second mortgage portion of assistance, there's a gift available from the program of up to 1.5%. And I just want to emphasize that this is a fabulous opportunity, especially for folks who don't have a special occupation, right, that they would need on select, or maybe they're not using an FHA energy efficient mortgage or USDA financing. They can still get a gift using this option, right? Golden Opportunities. So don't count your client out of getting a gift just because they don't fall into one of those categories. Check out Golden Opportunities. So when it comes to using our programs, I hope you understand the benefit of it and the fact that it doesn't add any time to the transaction, right? It's streamlined in, it doesn't weigh anything down. We understand that time is of the essence. So how it's going to work is, as a lender, you would access our program. You would make sure that your client is eligible, right? Their FICO, DTI income, all of that is in line, right? And then you're going to lock in the first mortgage rate and assistance options on our reservation portal. Now, as a realtor, if you'd like to partner with any of our lenders, we have over 150 participating lenders on our website. So we encourage you to network. You might already have contacts there that can get your client in the door on these programs. But it's important to choose a lender with excellent service because they are in charge of making sure that loan closes on time, right? Again, the entire loan fulfillment process is handled by the lender. And for the lenders we have on the line today who are interested in getting involved with the program, check with your company, see if they're already signed up for GSFA programs. And if they are, your next move is to take one of our lender trainings. We offer them once a month. We update the calendar. We offer them on a regular basis. They're live, they're interactive, and it gives you a more in-depth, comprehensive understanding of our programs and prepares you to deliver excellent service to your clients. Now, if your company's already signed up for the program, perfect. Just sign up for one of our trainings, and then after that, you can get user credentials. If your company's not already signed up for the program, the first thing they'll need to do is reach out to one of the master servicers on the program. And once they get signed up as a correspondent lender with those servicers rather, they can fill out our program agreement and lender profile. From there, we need the whole team to take the training, right? Whether you're sales, operations, etc. You want to be no problems, right? You want to be smooth as ice, right? When you're using these programs, so that you're not adding any stress or inconvenience to your client or your team members for that matter. Once you've taken the training, get your credentials and you're off and running on the program. Speaking of training, we have some QR links here on this slide that you can scan with your phone. That'll take you directly to the training calendar. As I mentioned, it's updated once a month, so there will always be opportunities for you to sign up and get involved in those lender trainings. Even as a realtor, I encourage you to take the lender trainings because it puts you on the same page as the lender. As you know, the process is going for your client, you'll be able to help answer questions, you'll understand what's going on, and it'll just make for a more smooth dialogue and help make that process even more seamless. So I encourage you to visit our website to get signed up for training. We also have marketing literature available in English and Spanish to help you market yourself alongside our programs. It's excellent for homebuyer events and other open houses, right? Other situations where you're going to encounter potential buyers who want to know what their options are and who can help. That being said, I want to thank everybody again for their time and interest today. I hope you gained some helpful information from our program today. Let's work together.
Thank you so much, Megan, for going over the GSFA Down Payment Assistance programs. Before you go, I just wanted to, it's all right. I just wanted to reiterate, what are the key aspects that that full lender training offers to them?
Yeah, so the lender training first and foremost is live. And so that automatically puts the participant in a position to engage, right? They get questions answered. They have an opportunity to get exposure to more content, clarification on the guidelines, the loan process. We take you through the lender portal so that you understand what the role is on your end from start to finish, right? How to reserve a loan, what it looks like when you get there, where to pull documents from, right? So a lot of the key process components are covered in the lender training, in addition to more extensive review of the guidelines as well. So you'll also get the slides as a takeaway from the training, which is helpful. It's kind of like a quick guide, right? Like a quick reference guide that you can leverage in lieu of going through a deep dive in the guidelines, right? If you just have a quick question or you're drawing a blank, you can just tap into your slides and the answers right there. So lots of bullet point benefits to taking the training.
Great. Thank you so much for being here today.
My pleasure. Thank you for having me.
So since Megan brought up agent-lender relationships, let's talk about that. The importance of identifying, what do real estate agents need from lenders? What do lenders need from real estate agents, so that we actually get these DPA programs into the hands of the borrowers? Go ahead, and I want to reiterate a couple of slides or statistics that we were talking about on Tuesday, Angel.
Yes.
One of those being your experience with an analysis the Down Payment Resource did. Would you like to share that?
Absolutely. In 2022, we did an analysis of HMDA data that examined the top 10 MSAs across the US. And we looked at homes and borrowers that would have qualified for down payment assistance and found declined loans that were declined only for cash to close or DTI, because of course down payment assistance is not going to change a credit issue or an appraisal issue. But we looked at borrowers that were declined for cash to close and debt to income issues, and found that 33%, so that's 3 out of every 10 declined loans that could have been salvaged if down payment assistance had been utilized. To us, that was massive. That we looked at tens of thousands of applications. And when we have found that when we're examining information nationally, we can dial that in and look that basically that's going to be about the same for every state. So growing your business could be as simple as reevaluating what those buyers who were declined for those two items, that down payment assistance can change, and turning that not right now borrower into a walking through the doors with keys.
Yes, thank you. And also on the screen is the statistics shared by CAR, the California Association of Realtors. About 63% of consumers have expressed that they would start looking into buying a home and qualifying for a mortgage loan if they thought that they could qualify for down payment assistance. A lot of opportunity out there. And one of the other things, Angel, that we talked about on Tuesday was how people can hold on to their cash and access down payment assistance.
Yeah, it's I always use the word leverage. So you're not just utilizing DPA, you're leveraging funds that are available to put you into a better position. And because all of our goal in this industry is to make sustainable buyers, to help buyers understand that they can have a level of comfort going into homeownership and looking at, hey, I've saved up X amount. then that's fantastic. Utilizing down payment assistance can also give you the ability to not drain your accounts as you go to the closing table. Very excited to purchase your home. And it can give you the ability to put those funds into savings, keep them in your account so that if in the first 12 to 36 months, as we all know, hiccups happen in life. And not just for first-time home buyers, just people going into a new home purchase. A life event could happen, something could happen with the home, and that means that buyer is more sustainable now because they've had the ability to put away that rainy day fund.
Yeah, I agree. So with that, before we dive further into some tips and tactics about building stronger relationships between lenders and real estate agents, we'd like to get your feedback. So up on your screen is an anonymous poll, and your responses should be fairly quick. We'd just like you to identify ways that you're today working with real estate agents in your line of business. And then we'll be able to look at those results, and Angela and myself and our guest speaker will be able to kind of discuss some of these ideas of things you're already doing, as well as some new ones. We've got about half of you have participated. Get your answers in real quick so we can look at these and continue with our webinar. Thank you. Okay, we're going to go ahead and close out the poll. Dan, do you mind doing that and sharing the results with all of you on the screen? There we go. So vast majority, this makes sense, are asking for referrals and introductions to potential clients. We've also got 48%, about half that responded, are sharing DPA program information or updates. About 30%, so about 1 in 3 of those who responded are attending broker office meetings. Another great way of educating real estate agents. Same on doing co-marketing or doing partnerships with open houses. About 1 in 3 of you. I see a lot of opportunity here. So with that, I'm going to close the poll, and we are going to talk about some real life experiences from a loan officer that has worked with GSFA's programs for many years, his success stories, as well as his strategies, and see if there's some more opportunities that maybe you have not dived into already. So with that, I would like to introduce our guest speaker, Chris Ruiz. He is a nationally ranked mortgage professional. He's recognized as in the top 1% of mortgage originators by Mortgage Executive Magazine for 4 years in a row. He's licensed in California, Nevada, and Texas. He focuses primarily on helping clients in the San Francisco Bay Area to achieve home ownership. He's got a strong track record of guiding first-time home buyers. They make up 80% of his clientele. I'd like to bring him into this conversation so that he can really talk about the different ways that he's navigated complex transactions and down payment assistance programs. Chris, you want to turn on your video and you'll be joining us up on the screen?
Absolutely. Thanks for having me, Carolyn. I am not able to turn on my video because I think it was turned off on me earlier. I was a bit early when I
Oh, that's probably one of our, that's probably our fault. Dan, would you mind turning his video on for us?
It says you should be able to turn it on.
Okay, let's see. Oh, it says you cannot start your video because the host has stopped it.
Oh, okay. 1 second. Let me give you ability to turn your video on again. There you go.
Awesome. There we go. So sorry.
We're-
Awesome. Hey guys, good to see you guys. Happy Thursday, everybody.
Hi,
Thank you.
Chris. Happy Thursday.
Good Thursday.
How
Thanks
are
for
you
having me.
doing?
Doing awesome. Actually, I'm actually just finishing up a pre-approval right now for a client. And you wouldn't guess what kind of program I'm using, GSFA. So
I can't imagine it would be GSFA. So
yeah.
let's leap into it just from that. Tell us a little bit about how GSFA's down payment assistance has helped with getting your clients into home ownership.
Happy to. So I want to compliment Megan. She did a really good job on her presentation. Everything that she spoke on, I can 100% attest to that speaks to GSFA's strengths and why it's helped a lot of my clients. Is the key word she mentioned multiple times was flexibility. GSFA stands out for a lot of my clients where other programs don't have as much flexibility. For an example, GSFA obviously allows you to go with LP for the AUS approvals process. And LP is excellent for folks that are self-employed. And if they have a 5-year history of being self-employed, we only need 1-year tax returns. So we can give them a higher average. The no first-time buyer requirement is huge for folks that have a rental property and they want to buy another property and build wealth and not have to be discounted from a first-time buyer program or down payment assistance because they're not a first-time buyer. Another huge one for GSFA that another well-recognized state program doesn't allow, that GSFA does allow, is you can have a non-occupying co-borrower. That is huge in saving deals. I just had a deal close last week. I think I was mentioning this to you, Carolyn, in our initial interviewing process. A client that was in the Platinum Select program as an educator, as a vice principal here in El Cerrito. And her husband's income, unfortunately, was not able to be approved because of it had some complications being non-taxable, etc. That was unique in his case. So we had to bring mom into the mix. But because this GSFA Platinum did allow that, we were able to close on their $875,000 house in El Cerrito and get that house closed for them because the GSFA Platinum allows a non-occupying co-borrower. So those flexibilities I think are huge. And then of course the generous DPA options, going up to 5% in assistance. I had a client close last month. I totally had forgot about the $5,000 gift, and the property was in a census tract. And when we did our reservation, we had this extra $5,000. I was like, team, where did this come from? They're like, GSFA gave it to us. I'm like, awesome. The client was elated, of course, because of that extra $5K that they weren't even expecting. So those are the reasons why. I know multiple, Angel, but why it's how GSFA has been very instrumental for a lot of my clients.
How about multiple unit properties? Have you run into that?
I have. That's another one. Excuse me. One of the few programs, right, is you can buy a multifamily property with GSFA. I have run into that maybe 2 or 3 years ago is when I've closed one. I've not done one recently, but unique for GSFA Platinum.
And then I'm kind of curious, how do you address the concerns around some of this down payment assistance having an amortized second associated with it, right?
Great question, Carolyn. So how I address, I love to give people options. When folks don't have options, that's when they're more likely to shop you. So when I'm explaining the DPA, the amortized second over 15 years with clients, I remind them, hey, this is going to be expensive. If you do take on this amortized second, you'll likely pay double the cost of the principal amount, right? When you do on today's rates. The one nice thing about the program is it can be paid off early without any penalties, right? So I remind clients of that, especially if they fall in the select category and they want to access the free money, the gift, and then pay off the second if they have if they have those funds readily available. So I remind folks of that. Hey, if you come into a bonus next year or a stock option, you're able to sell some stocks and you can go ahead and then pay that off. Be thoughtful of that. That's something you might want to consider. Or if you don't end up needing to tap into a rainy day fund and you have some extra cash, you can throw it towards the second. But also, the second is not that large in most cases. For like let's say a $700,000-800,000 house using the 3 or 3.5% assistance, that's less than $200 a month. And so I remind folks of that also. Hey, can you cut out $200 of Starbucks, Netflix, and maybe Hulu to get a house while we figure out how to pay back that second? Right. So it's all about sacrifice for sure. If you want to get into homeownership, there's going to be some sacrifice.
And I like to piggyback what Megan said about that loss of equity with if you wait, that home price is most likely just going to continue to get more expensive.
Yeah.
So not only are you losing out on that equity that you could be building now, but you turn around in 2 years and it's like chasing your own tail, because now houses are more expensive, which means the mortgage loan that you have to take out might be more. And it's a never ending cycle. This is an opportunity to get in now.
Agreed.
Absolutely. It's something, and we hear it all the time. It's rates, it's cost, it's rates. It's not going to change. It's what happens. The value of homes is either going to sustain or go up. So we know that buyers going in now is going to make more sense for them, especially in a high cost state. So it just makes sense to be putting that equity toward your own home versus someone else's home. Because if you're renting, you're gaining equity. It just is not for you.
Yeah. So one of the things I loved about our last conversation, Chris, was when you shared about referral business that you get from agents. And that's what I want to key in on for the next 5 minutes. Tell us your experience with working with real estate agents, the impact it's had on your business, and strategies that the attendees could take from what you're doing today.
Sure. So 90% of my business, I would say, still come from is generated from realtor partners of mine for the past
90%?
Mhm.
Wow.
Yeah, so a big amount for sure is coming from the other 10%. I would probably say it's divided between past clients that come back to us, or one of my CPAs, or a insurance agent of mine that sends some business my way. So I would say that's the other 10%. So agents are huge. We all know that. I think we have one on the Zoom call here today. When I saw that poll that you guys threw up earlier, I could check almost all those boxes, because I would say all of those I utilize to my benefit, to my advantage, to be able to go ahead and partner with other agents and explain to them how I can add value to their business, how I can help them close maybe 2 to 4 more deals per year and impact their bottom line because of these other programs that maybe some lenders aren't offering, or think they're too hard, or think that they have an extended close time. Because to Megan's point earlier, there's no additional time frame for doing closing a DPA with GSFA. We've closed these in 12, 14 days if we have a well-qualified client that's vetted and gone through underwriting. So I explain those benefits to agents. I remind them, hey, who do you know that's a first responder, medical professional, educator, or that works for the county? If you have clients like those, think of Chris, because I have a program unique for them. So that will put you top of mind. I do social media videos around these types of professions, or I do lunch and learns every month, and I do workshops every quarter with a specific agent of mine, and we always talk about how GSFA sets themselves apart with these types of programs, with the offers that they have. So it's been huge, and that's where most people will remember Chris, or agents of mine, is because Chris has this menu of options that is going to be able to reach so many of their first-time buyers or clients that are majority of the people buying right now.
One of the things that Angel and I are going to share as some ideas for the attendees is celebrating success stories and doing it with your agents. Any thoughts on that?
Yeah, it's great, for sure. There's so many. Again, the success story we had last week was this client that closed on their very first home, very scared about buying a place. They're unique also. They didn't need DPA. We actually used the GSFA competitive rate with no DPA, and got the $5,000 gift.
Wow.
But the rate was competitive. And that was a success for them, right? That $5,000 for sure impacted them. So I think those are huge. We do those. I don't do them as often as I should, but we do. When I do them, they're called key days for the client, and just interviewing them and posting it on social media, on Instagram and Facebook, to be able to go in and see what was the huge impact that this program was for them.
Right.
So I think that'd be huge, Carol.
So I want to thank you for being here today. I think hearing that 90% of your business comes from real estate agents, to me, is huge. I think we forget how important networking is, and building a relationship, not just asking for referrals, but building a trusting, reputable relationship with real estate agents, and reciprocity. How do you say that word?
Reciprocity.
Yes. Sharing that, bringing business to them, incorporating them in our success stories as part of those successes, in really building that reciprocal relationship. So Thank you for being with us, Chris. I'm sure as we talk on our next session and we bring you back, we're going to have you share all your experience with your online presence and the ways that you're using digital marketing and those tips and tactics too. So we will see you next Tuesday. Thank you.
Bye, guys.
See you next week. Thanks, Chris.
Okay, I am going to segue us into discussing some more tips and tactics. Let's see here. With you for building trust, communicating better, and getting referrals from your agents and vice versa, agents to lenders. And this is because Angel and I want you to take this information today. We're hoping we have your buy-in on the importance of those realtor-lender relationships, but taking action, taking this info to action. And so we're going to run through some suggestions for things that maybe you've never considered before. Angel, you want to start us out?
Absolutely. So what we're talking about when we say action is when you get this information and we finish this webinar series and you're so pumped because you've heard all the things about what you can do with down payment assistance. We want you to be a visible educator. Have a quick training or a webinar for agents and buyers. And I do see that we have a couple of agents on here. So poke a couple of your LOs that are here as well, or that that work with down payment assistance and say, hey, let's host a training. Let's do a webinar. Let's co-brand something and co-market and really get our consumers knowledgeable about what's available. Present at broker meetings or in office events for LOs or lenders, share posts, reels, or short videos like Chris just talked about, and tips on social platforms.
I think what's really important is you need to prove your credibility.
Yes.
And then turn it around and help them to also be able to speak about down payment assistance with confidence. Because if both of you are out there doing education, it's going to strengthen the message. And that's what a team is helping each other succeed. So you may be sharing information about the programs and how they work and dispelling myths, but then give them the tools to do that too. And sometimes it's as simple as putting a one-pager together with myths and actual facts about the programs that you're working with. And when we're talking about things like going out and speaking at events together, don't forget about your realtor associations. Your local realtor associations have ongoing meetings every week, I think, where they go over listings and things in the market. That's a great opportunity for you to be a guest speaker. You can like set up lunch and learn type sessions. Another great way to network with lenders, with real estate agents. How
And
about,
remember,
sorry.
oh, sorry, Carolyn. I was going to say, remember, and as I'm sure you know, LOs talk, realtors talk. So when you're sharing information, they're going to tell someone else who has a buyer that may not have down payment to close on a home. So that is something that you're going to share with them that they could share with other realtors in their field that is going to say, like Chris said, hey, I know Chris. Chris knows DPA backwards and forward. So it's going to help you all grow stronger with this information and being able to share and communicate.
Yes. So what kind of information really is going to empower real estate agents? What kind of education? So here's some thoughts we put together. One of them is doing what Chris does, showing them how by them referring to DPA programs, they're actually going to expand their buyer pool. If Angel's survey through Down Payment Resource said 1 in 3, 33% of people who were not qualifying due to equity or debt to income ratios and cash resources could have qualified, or most likely could have qualified if they had accessed DPA, that is expanding buyer pool. Share that with your agents. You know, look at the consumers that they're working with today, or the buyers, and the ones that maybe weren't accessing DPA and they fell through. Talk about them a little bit. Just do some basic education around how DPA could have expanded their business.
And
Using
2
scenarios.
points. Yes, using scenarios. And 2 points I definitely wanted to touch on is where Chris said he's closed a GSFA loan in 12 to 14 days. Agents need to know that this is not a barrier or an extension. It's all about process and knowledge, and share that information, communicate that information. Agents need to, they don't want to be an LO. They don't need to understand the whole process, but in their part, their piece of getting this buyer into a home, it helps them to know that, hey, this is not going to extend our closing. It's all with the lender. GSFA doesn't step in and do extra things. And here's where if you've got a 30-day close on your purchase contract with a GSFA loan, you're going to close your loan in that 30 days.
Mm-hmm. And don't forget that how important it is to work with real estate agents so they know the profile of borrowers that could fit DPA programs. What we keep seeing and hearing is most people think down payment assistance is only for first-time home buyers, but you've got people returning to the market that can qualify. You've got people, like Chris said, who have a rental property today, so technically they own a property, but they're buying a new one that they're going to be moving into as their primary residence. They can qualify for DPA. Angel, you always mention people who are downsizing.
The empty nesters. Listen, as a mother of 8, when the last one moved out, I did not want to clean that big old house anymore. So it was time to buy again.
And I like to remind people to not forget people whose life circumstances have changed.
Yes.
Relationships that ended, people who are going through divorce and liquidating property, or maybe they were just secondary on a loan and that relationship or situation ended and they now want to buy their own home. Just don't forget those types of buyers, and explain that to your lenders, to your real estate agents, and vice versa, so that you guys are profiling the right customers that could succeed with DPA. We talked about promoting success stories. Here's some suggestions up on your screen. You're gonna see a copy of the slide presentation afterwards, so you can look at these in more detail. One of the things that's on this slide is about posting on social media, showing real situations, real successes, real value. Join us next Tuesday. If you have not registered for part 3, the entire hour is about online marketing, the importance of reaching audiences online, because that's where the buyers are today. And how do you do that? How do you do these social media strategies? And we're going to give you tips and actual tools to make it easier for you. We're going to give you the tools to do social media posts that will help make your life easier. And then the last one we are leaving you with, was that the 4th one? Or did I skip one? Is inspire confidence with reliable, clear support. Anything you want to share on this one, Angel, before we
go? Just do your best and understand that knowledge is key with down payment assistance. But I think I know it's coming straight from someone who's doing down payment assistance and doing it well. It's not going to slow down your closing. It's all about know your product and be a source of knowledge for your partners and your team that you're building. Communication, knowledge, process.
Yes. Okay, so we're going to review this really quick. We covered the Platinum and Golden Opportunities program, the basic structure, basic qualifications, and buyer benefits. If you want to dive further into this, the actual loan process itself, get into some of the nuances in those guidelines, we highly encourage you to sign up for the full lender training for either Platinum or Golden Opportunities. They're listed on our website. And then we talked about agent-lender partnerships and how they can grow your business, gave you some tips and tactics. But what's important is you take these ideas. We asked you for feedback on a poll of a few things that you're doing today, but I can guarantee there were a lot of ideas and suggestions on those slides of things that maybe you have never considered doing, and maybe it would help you expand your business. But take these ideas out there and start putting them into your business strategy. And then we'd love for you to join us for part 3, which is next Tuesday, same time at 10:30 a.m., where we're going to dive into growing your influence online through digital marketing. I want to thank you all for being a part of today's webinar. We hope that it was valuable. After I close the webinar, a survey is going to pop up on your screen, and we'd love for you to share some feedback with us. It helps us to make these trainings more efficient and more valuable to all of you. So thank you for joining us. We have recorded this session, and it will be up on the YouTube channel probably by the end of today. And I just want to thank you all for being a part of supporting homeownership in California. Take care.